Stephanie, it's good to see you. A quick question for you, because I always worry about something. I'm sure you do too, right? I worry when I don't worry, right? Because that means we're too complacent. The one thing, though, that is on my mind, and I want to get your take on it, is commodity prices and the increases that we have seen from the March lows in copper, in iron ore, in aluminum, in steel, etc. And I'm wondering when this all comes home to roost in terms of earnings and margins being impacted? Or do you think companies have actually gotten so much in terms of productivity and they've restructured so much they can handle a little bit higher input costs?
I'm worried. My biggest worry, I say, is not so much for this year, but beyond this year, Stephanie, 2022-23. I think we've way overused economic policies, not only in the United States, but around the globe. The policies from monetary and fiscal that we're utilizing is bigger than ever before in our history. And I do wonder what the latent impact of that eventually is. And one of it could certainly be runaway cost or runaway inflation pressures that could bring an early abort to this recovery overall. But, you know, there are some good offsets to that. You bring up one, productivity. What I would say is a recent piece that I've written here shows that when you have great growth stock cycles like we have had in the last few years, over value stocks, that's typically led by accelerated growth and productivity over the next 3 years. So we've got at least one signal suggesting when we have a surge in spending on new era products, that suggests new ways, new methodologies to do things. It also suggests applying more efficient methodologies, increasing the productivity of your labor force. That leads to greater productivity. So we might get a productivity surge just at the time that we need it against all this stimulus hitting aggregate demand in the world.
All right. Shepard Smith here. Thanks for watching CNBC on YouTube.